Hey everybody. Okay, we are past the CPI and I wanted to review this very volatile day because yesterday, Tuesday, was a complete bore. The market was completely stuck, whereas today was very far from a bore, very dynamic. Before I begin, I just want to mention, as you know, in recent weeks I've been toying with the idea of bringing advertisements back to the site, which I've never really liked, but I've had this internal struggle going on, like what to do with all these free users who use the site every day and never send me any money and And I very reluctantly decided to bring ads back, and I've changed my mind. I just can't do it. It's just, they're gross, and I like the aesthetics of the site, and so showing you ads for, like, you know, the new Plymouth or some kind of cheddar cheese, no, I don't want that on Slope. So I've taken Max's suggestion. You will see here a tip jar. Swallowed my pride and just put out the tip jar there, and you click on it and you get a little thing to fill in, so you can send me, you know, oh, yeah, Tim, I gotta say thank you. So anyway, please just throw me a couple of shekels if you use Slope and benefit from it. It's the decent thing to do. So having said that, let's jump into the market. As I'm recording this now, it's just a couple of minutes after the normal cash close. The ES is up about 22 points, the NQ is up about 154 points, the RTY is up about 12 points. It was a green day across the board. Of course, it was kind of a crazy green day because we, the moment the CPI came out, we had this huge rally. I'm not quite sure what happened here. I went to walk the dogs and I was disappointed to see yet another lunge higher. And we peaked on this about 16 minutes before the regular open. So we rallied about, what was it, like 50 points? 50 points on the ES in a very short amount of time. And I figured the day would pretty much suck out loud. So the market opened and it was pretty strong, and then it started sliding and up, and then sliding up, and then we began this thing. So we bottomed about 4 hours into the regular trading day, and that was great fun. And of course, that was the end of it, and it spent the rest of the day going back for no reason whatsoever. So we were up for the day, but a little bit off the highs. It really didn't change anything fundamentally. I mean, you know, for all the ink spilled over this event, if you dial it back to like 4 bars, you know, it's inconsequential. You know, we are still exactly where we've been for eons here. We're on the high part of this big range. We are far more likely, I think, to fall within the range than we are to, like, just suddenly lift ourselves out of this quagmire. And, you know, we're still range bound, I think, between 3,800 and 4,200. Those are the magic levels, about a 400-point spread between those. And we have been bound by those for month after month after month after month after month. And it wouldn't be the worst thing if we stayed so. You know, if we could work with that, then there's a lot we can do with that. In some other markets, gold had a outsized reaction. It's a little counterintuitive because you figure, oh, inflation's cooling off, therefore the inflation hedged gold should wither away. No, not at all. It went exploding higher by about $20 in short order, and it also let all that go and actually ended up down on the day. Same with silver, although, you know, much worse performance with silver. And then as far as bonds go, those held up pretty strong. Let's check out the NQ. Tech stocks have been particularly strong lately. So these actually bested their morning high. They actually they've been exceptionally strong for a very long time. And as I've pointed out ad nauseum, it does not have the nice, clean, tidy range that the ES has had. This is, even on a weekly basis, this is much more of a mess. I definitely would have a lot less ammunition to debate a bull in this space because it's cleared the rails here. It's basically got this zone to work with, but the Fibonacci's simply haven't been as trustworthy on the NQ as they have been on the ES. So the face-off, sorry, I don't have a more creative term for it, but I think that says it all. The face-off between this pattern and this pattern still absolutely remains. It is completely unresolved. It would take something dramatic, I think, to resolve it. And what would constitute a resolution would be either on the bullish side to essentially get over 4,200 and not look back. You know, get above this level, and to really stick it to the bears, beat the highs that we saw back in mid-August. And that would really open up this entire zone to rally based upon this inverted head and shoulders. On the other hand, and as a bear, I've got to offer the other hand, I think the prospects for the bears are more muted because whereas this entire range here, I think, is open for the bulls to blast things higher, I think we've got a more modest range here for the bears to work with. But I will happily take it. The notion of getting below 3,800, as I've said, I think it would take global thermonuclear war at this point. It just, this damn market seems so robust and so immune to any reality that I'm happy just with the notion of about a, you know, it's a pretty good range. That's 350 ES points. That's a lot to work with, so I'll gladly take that. We'll just wrap it up with the poor old VIX, see where that wound up. Yeah, it's down to the 16s again. So we're essentially at the kinds of levels that have served as the low zone for many, many months. This is a weekly chart, and as you can plainly tell, this is really battered down to levels that don't typically stick around these lows very much. I sure hope this doesn't, because this, yeah, 16, not my cup of tea. I'm more of a 32 kind of guy. So anyway, ending the day, I've got I'm down from 30% cash down to 10% cash. Had a slightly profitable day. And although I don't think the PPI holds the import the CPI does, we'll see what that does for us tomorrow morning. Thanks for your attention. Hope you're doing all right.